Welcome to the Riskwiser Zone. I'm your host, Louis. Today, we're diving into a fascinating discussion that's been making waves in the financial world. As always, our goal is to provide you with unbiased and insightful analysis of the latest market trends and news. We've got an exciting show lined up for you today, with a focus on the intersection of cryptocurrency, government policy, and market volatility. Recent reports have emerged about a potential tariff dividend plan, which could see rebate checks of $1,000 to $2,000 being sent to individuals funded by tariff revenue. This proposal has sparked intense debate among investors, economists, and policymakers alike. On one hand, some argue that such a move could provide a significant boost to household expenditure and appetite for risk in the last quarter of 2025. With Bitcoin trading near record highs and US spot BTC ETFs drawing steady inflows, there's a possibility that this stimmy narrative could evolve into a lasting catalyst for crypto markets. On the other hand, others caution that the plan specifics are still unclear and the impact on inflationary pressures, supply chains, and the overall economy is uncertain. The Federal Reserve's upcoming meeting on October 29 will also be closely watched, as high odds are already priced in of a rate cut, which could further increase pro-risk positioning in equities and crypto. As we explore this complex issue, we'll be examining the potential implications for cryptocurrency markets, including Bitcoin, and the broader financial landscape. We'll consider multiple perspectives, weighing the potential benefits against the potential risks and uncertainties. So, stay tuned as we delve into the details of this developing story and provide you with expert analysis and insights to help you navigate the ever-changing world of finance. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're continuing our discussion on the latest market trends and economic developments. In our previous segment, we explored the impact of global events on investor sentiment. Now, let's dive into a story that's been making headlines in the financial world. The U.S. government shutdown has been a major news item, with many wondering how it would affect the stock market. However, despite the shutdown, the market has continued to rise, with the S&P 500 and Dow Jones Industrial Average hitting all-time highs on Friday. This may seem counterintuitive, given that the shutdown has delayed important economic reports that usually guide investor decisions. But what's driving this trend? Some analysts point out that it's not just big tech stocks that are pushing the market upward. Smaller stocks, as represented by the Russell 2000 index, and even gold have also seen gains. This suggests that investors are looking beyond the short-term uncertainty caused by the shutdown and focusing on the underlying strength of the economy. Others argue that the market has become desensitized to government shutdowns, which have become more frequent in recent years. As a result, investors may be taking a wait-and-see approach, choosing not to make any drastic moves until the situation resolves itself. It's also worth noting that the current shutdown is different from previous ones, with some agencies remaining open and others closed. This patchwork approach may be contributing to the market's relative calm, as investors try to gauge the overall impact on the economy. As we move forward, it's essential to keep a close eye on how the shutdown affects consumer confidence, business investment, and ultimately, economic growth. While the market may be rising now, there are still many uncertainties that could potentially disrupt this trend. We'll continue to monitor the situation and provide you with updates and analysis as more information becomes available. For now, it's clear that the stock market is sending a message. Despite the shutdown, investors remain optimistic about the economy's prospects. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're wrapping up today's show with a closer look at some of the latest market insights from none other than Jim Cramer. As we always do here on the show, we'll be diving into the details and giving you our fair and balanced take. So, let's get started. Jim Cramer has been sharing his thoughts on several stocks lately, including Chipotle Mexican Grill, which he believes is a buy due to its strong same-store sales growth and digital transformation efforts. He also expressed optimism about Nike's ability to turn itself around after the company reported solid earnings, despite facing industry headwinds like tariffs. Cramer has also been discussing other notable companies, such as Tencent Music Entertainment Group, where he decided to move on from the stock in favor of Alibaba when it comes to investing in China. He's also been talking about Jabil Inc., which he thinks is a great play due to its excellent numbers and growth potential. Additionally, Cramer shared his thoughts on Nike Inc., saying that while turnarounds take time, he feels more confident in the company's ability to improve after its recent earnings report. He also mentioned Tencent Music Entertainment Group, where he decided to stick with Baba when it comes to China. Now, we know some of our listeners might be thinking about investing in these companies, but as always, we want to remind you that past performance is not a guarantee of future success. It's essential to do your own research and consider your risk tolerance before making any investment decisions. Here on the Riskwiser Zone, we believe in providing you with the information you need to make informed decisions. We're not here to give you hot stock tips or try to sway your opinion one way or the other. Our goal is to provide a balanced view of the market and help you navigate the world of investing with confidence. So, there you have it. Jim Cramer's latest thoughts on some of the biggest names in the market. Whether you agree or disagree with his opinions, we hope this segment has given you some valuable insights to consider as you continue on your investment journey. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution.